Joining me now to talk more about the volatility in crypto and to really hash out the bull and the bear case for this asset class is our expert panel. Skybridge Capital founder Anthony Scaramucci, Duke Law professor Lee Reiners, and CoinShares Chief Strategy Officer Meltem Demirors. Meltem, Lee, and Anthony, thank you for being here. Hope you're getting your Friday off to a good start. We're going to jump right into this. Meltem, ladies first, I want to ask you, in a few words, a few phrases, where are we at in the state of cryptocurrency?
The phrase is very simple: fear, uncertainty, doubt. There is a lot of fear out there. There's a lot of uncertainty about direction. And as a result, we're seeing investors pulling back. We've seen buying of the dip. A couple of weeks ago, we saw the largest week of inflows when Bitcoin started its decline. This past week, we saw around 140 million of outflows. So we're keeping our eye on how that expression of sentiment plays out in the market, with people positioning either long or short.
All right, Meltem, fair to say that you are a bull when it comes to cryptocurrency. Lee, I'm going to go to you. I think it's fair to say you're a bit of a bear, at least. If you had to put it in a few words, a few sentences, what would you say the state of cryptocurrency is right now?
Well, good evening, Frank. And the way things are going right now, this might be the last crypto night in America. So I just want to say to Anthony and Meltem, it's been an honor to share the spotlight with you here. 40% of Bitcoin holders are underwater right now. And, this was inevitable. And I've been saying this for quite a while because, the only reason people have been buying digital assets is because they think they can sell them to someone else at a higher price in the future. And eventually the supply of greater fools runs out. And I think that's what's happened. And the problem, if you're trying to assess whether or not crypto is oversold, is what is the methodology you're relying upon? And there's no cash flow. There's no fundamentals. It's an asset that trades entirely on sentiment. And right now that sentiment is negative, and there's no indication that it's going to turn positive anytime soon, especially now that interest rates are rising.
Lee, that was more than a few words, but it was spicy, so I liked it. Anthony, we're going to give you the next chance to hit this one. I mean, what is the state of cryptocurrency right now? Where are we at?
Well, just two quick things. Frank, you left out the Luna Terra debacle in your preamble, and that caused a shockwave through the markets. And I think it's causing a cleansing of the markets and a lot of the altcoins in the space. And then secondarily, what I would say to Lee is I wish he'd come to Crypto Bahamas with us, where Melton was explaining to people the use cases, the broadening of the Lightning Network, and he would have seen that there's billions of dollars of capital entering the space, including the Andreessen Horowitz $4.5 billion capital raise that they announced this week. And so I like following the numbers. Where are the numbers? Use cases are going up, wallets are going up, and there's exponential growth in the industry. But like all early technology, you have these waves of volatility. And as Melton said, fear and uncertainty and doubt is the lead right now. And I predict until we get a cash ETF approved in the United States, Lee's working against that, I'm working for it, we'll probably see this thing languishing for a period of time. But when we get the cash ETF, I think we'll be off to the races. And remember, Fidelity made an announcement that they're putting this stuff in their 401k product offering. So I think very good times are ahead. We just have to be patient.
Yeah, we're going to touch on that in a minute. And by the way, I think all of us just wish we were in the Bahamas, whether it was Crypto Bahamas or not. While you're talking, Anthony, let me just ask you a question. You touched on Luna and Terra really quick. A lot of people are concerned about that. It's caused a lot of concern in the market, but it hasn't really trickled into other stable coins. But are there any lessons as a crypto investor you can learn from Luna and Terra?
Listen, our crypto team wrote about this. We said it's impossible to call something a stable asset that's being backed by something that has an 80 vol. So we wrote about this. It was unshaky ground from day one. And when it imploded, we were not surprised. Having said that, it did cripple for the short term the industry. And so I just think we need the healing process. Lee points out something that I do believe. There are speculators in the market that are purely buying this stuff because they think they can sell it to somebody at a higher price. I think we've washed a lot of those people out with the Luna Terra situation. And I think as we return to fundamentals and people that are actually really doing the homework and understand the technology and recognize that the blockchain and things like Bitcoin are going to be these massive delayering mechanisms for our society, where they're going to take middlemen and middlewomen out of transactions and lead to unbelievable economic efficiencies. As we get those fundamental investors back into space, I think you're going to see these things rally.
So, Lee, you are someone who's very educated on the space. Is there something that you think everybody, whether you're a retail investor or institutional investor, should learn from Luna and Terra?
Well, stay out of crypto. Luna and Terra were not the cause of the sell-off in crypto. It was a consequence. The sell-off has been going on for quite a while. Now, of course, I think there are some specific issues at play with algorithmic stablecoins, which is that they're anything but stable. I mean, there are other fiat-backed stablecoins like US Dollar Circle that have performed well. Tether has done okay, although it did break the buck briefly a few weeks ago. But I think stablecoins, it's critical that we regulate this space, Frank, because 80 to 85% of crypto trading and lending on DeFi platforms and exchanges abroad that are unbanked occurs via stablecoins. So it really supports this broader crypto ecosystem. And right now, the Treasury Department and the White House are trying to require stablecoin issuers to become FDIC-insured banks, so we don't have this repeated type of run risk that we saw with Tether and that we saw with Luna and US Dollar Terra, and which we could see with Tether. And in Tether's case, they hold over $30 billion worth of commercial paper. So if there were to be a run on Tether, they would have to sell those assets quite quickly, which would drive up borrowing costs for real companies in the real economy. And you would have a spillover impact that really would just be unfathomable. So we have to get stablecoin regulation right and broader crypto regulation right.